we'll try and get a perspective from the management joining us. We have Mallana Sasalu, who is the CEO South Puravankara, joining us this afternoon. Great having you here, Mr. Sasalu. Just talk us through what's driven the strong print, at least this time. Has it been execution? Has it been deliveries? What's played out?
Hi, Harsh. It's always great to be with you.
Great having you.
Yeah, thank you. In this quarter, what has happened is that in the Q1 FY26, we did around 1,124 crore rupees of sales. And that now in Q1 FY27, we've done 1,439 crores, and that's around 28% higher than what we had done earlier. And the sales volume also has gone up by area 1.25 million square feet to 1.36 million square feet. Similarly, the realization has gone up as well, 8,988 rupees per square feet to 10,589 square feet. This is on the back of, the sustenance, the pricing, taking up the pricing on sustenance, and also the new projects which are coming up, which came up last quarter of a higher value. So because of which the per square feet price also has gone up. We've done good collection, 857 crores, and against that, we've done around 1,199 crores. And that's the most important thing for us. It's a 40% up, which actually denotes that the construction is on track, and collections are on track, and we are hitting the milestones, and we're selling well. So that's a good thing that's happening. And the total revenues, importantly, it's gone up. So we handed over quite a number of units this time, and 877 crore rupees of revenue recognized. And also compared to what was happening in the first quarter of FY26, and which was a loss of 69 crores, we made a profit of 25 crores. So all of that is showing one thing, that the hard work the team is putting together is working, and the results are there to see.
Mr. Sasalu, will it be linear in terms of the way in which the numbers pan out for the rest of FY27? Do you continue to grow and do you continue to do the deliveries on ground continue to go up?
Yeah, I think there are three things in our industry, right? One is to make sure the deals are closed on time and there is enough goods to sell. And the second thing is that about our ability to execute. And so we've got quite a good ground force that to execute, and whether it's approvals, whether it is execution, handing over. So we are doing extremely well on that side. The third thing is that our ability to fund these projects, and which is, and time and again, we have done well in the last couple of years, 2-3 years, that whether to acquire the new projects or to fund the existing projects. So we have not had any problems. So just looking at whether it is linear, it could be a little bit up and down, but I don't think that, as I see that now we've got around 27,000 crore rupees of total launches, GDV, that is up there for this year. And with an additional 13,000 crore rupees of unsold inventory that we have, all of that put together is 40,000 crore rupees. So the 11,200 crore rupees guidance that what we've given, we feel we should be able to reach there, barring how the approvals go. Even if few projects are missing the target and couldn't be launched, or the one which is mentioned in Q2 may go to Q3 may go to Q4, I expect that the growth has to be, and from here onwards, the growth is going to be in a determined path.
So, Mr. Sasalu, if you could just identify which projects and as per what timeline are you expecting the approvals, especially for this, projects worth about 5,200 crore rupees of GDV that you've, accounted for in Q1?
See, in Bangalore, Snehi, that we have around 14 projects in Bangalore, and in Cochin, we have 3 projects to be launched, and 2 projects in Chennai, and 1 in Coimbatore. And also we have in Bombay, we have 3 projects to be launched. So all in all, so that's where the details are coming up. In Cochin, that City Spire 3, which the project was City Spire, which is going to be launched, is around 1,200 units, and it's one of the largest projects to be launched in Cochin. So apart from that, we have a project on Hennur Road and there's a Kanakapura Road property. And because since we do not have the RERA for these things, I'm hesitating to give out the names. But nevertheless, across Bangalore, we are having launches, which include some of the projects where project has already been approved, and there are phase launches as well. So my confidence is coming from that basis.
Good to hear that. Also, Mr. Sasalu, about your realizations, because they increased 18%, right? Wanted to understand how much of this 18% increase is sustainable pricing power versus, say, premiumization or product mix, and what should we assume for underlying pricing growth going forward?
So the premiumization has happened. First, I'll talk about the sustenance. In sustenance, I think we've taken the prices by 7 to 8% in the last 1 year that we have seen increasing in pricing because of the construction cost is also going up on the other side. So the 10,589 rupees that what we've achieved, I think we should be able to easily beat that, simply because all the projects which are lined up, or except for the one which is lined up in Coimbatore, that I expect them to be higher than this number. Particularly the projects which are going to be launched in Bangalore, there is no project less than 11,500 rupees. So we should be comfortably able to beat this number of 10,589 rupees.
That's quite interesting. Also, around 59% of your Q1 sales value, in fact, came from Bangalore alone, while a significant part of the new acquisition pipeline is also concentrated in Bangalore. What is the future plan of the geographical diversification that you have in plan?
So I think Bombay also did extremely well this time. That's 23% of our sales came from Mumbai, which was not to be in the previous years. So particularly our project in Andheri, Lokhandwala, Estrella did extremely well. And in Bangalore, we did around 55.8%, in Chennai, 11.9%. Bangalore is our home ground, so we will continue to do well there. We continue to acquire more land parcels. And of course, that we want to consolidate in other regions like Chennai and Mumbai. Of course, the efforts are there to increase our portfolio size in Mumbai and Pune as well. So we're in 9 cities, so we have to be making sure that we get our market share higher in those areas. So that's the effort that's going on.
Okay, Mr. Sasalu, good to hear that. And markets as well, liking your performance and commentary too. Stock holding up quite a fair bit as we speak right now. That's, of course, Puravankara in trade for you. Let's just bring